Let's welcome our expert, though. We have Sacchitanand Uttekar of Tradebulls who joins us on the show. Hi, Sachi. Good afternoon. Good to see you in. Who would have thought the bulls are feeling so good, right? We went down to 21,700 and everyone was calling for lower levels, but the market has flipped it on its head. We have had a 10% rally from those levels, and on the Nifty Bank, it's been even bigger. How do you trade the index?
Good afternoon, Nigel. Good afternoon, Hormoz. I think clearly the market momentum is very strong and very significant. In fact, the way Nifty, breached above that 23,900 hurdle with a gap, I think that is a very significant development within the progressing uptrend. If you look at the data from the options perspective, there's a clear-cut sign that 24,500 is something that can be seen during this particular expiry itself. We are expecting that this particular rally may continue towards 24,440, 24,500 thereabouts. Even if you look at the writing data, as you rightly said, 24,200, 250 looks like a decent base. So until unless we don't see a change in sequence on the lower side, the possibility of this particular momentum getting carried forward is quite high. Even if you look at the Nifty Bank data, which has been very significant, I think the developments from a price perspective are still indicating that this particular rally may extend its legs towards 57,160 thereabout, which may be seen in the in the coming series itself. So we are optimistic when it comes to both the indices. From a trading perspective, I think Nifty is still giving us a better reward to risk opportunity. One can place a stop loss somewhere close to around 24,110 on a closing basis and look for a target of around 24,440, which can be achieved during this particular week itself. So we are looking at buying opportunities. When we look at the individual constituents which can drive this particular rally forward, we are looking at something like a Reliance, which has still not contributed so much. But if you look at the recent data, it is now challenging its 200-day exponential moving average, which is placed at around 1,300. The V-shaped recovery is very supportive, and if you look at the way its ADX is again moving, especially on the weekly charts, there is a possibility that Reliance may display a strong breakout move towards 1360. From a trading perspective, one can expect a swing towards 1325. Keeping a stop loss at 1274, one can add fresh long positions in Reliance. The second stock on our radar has been SBI. Now, if you look at the last three trading sessions, we have already seen a strong vertical rally in this particular counter. But if you look at the overall structure, it is a classic breakout from an inverse head and shoulder formation with a neckline which was placed somewhere close to around 780. If you look at the pattern target, it is placed somewhere close to around 880. So there is a good amount of headroom still available. From a trading perspective, again, the way the ADX has jumped above that 25 mark, it is a good sign that this ongoing momentum would continue. So even here, we are recommending, building long positions, keeping a stop loss at 818 on a closing basis. One can expect an immediate swing towards 856, followed by 880. Disclosure would be that we have recommended both these counters to our clients.
All right, Sacchitanand, thank you so much for sparing time joining us today with your views on the index and on specific stocks as well. SBI, one of his recommendations up for the sixth day running today, target of 880 on the upside is still lower than the all-time high that the stock had made, which is around 912.